BigBear.ai just dropped to $3. For some investors, that screams buy the dip. For others, it's a flashing red warning sign. But here's the real question. Is this low share price an opportunity to load up before the next AI wave, or a signal to steer clear? In this video, we'll break down exactly why the stock fell, what the company is doing behind the scenes, and whether the fundamentals support a comeback or continued decline. Stick around, because what we uncover might change how you look at this entire sector. Hey everyone, I'm Robert, and welcome back to The Alternative Investor. Today we're digging into one of the most discussed and divisive AI stocks in the market right now, BigBear.ai, ticker symbol BBAI. It's a stock that exploded during the 2023 AI hype cycle, partnered with Palantir and major defense contractors. And now it's quietly slipped down to just about $3 a share. So what happened? Is Wall Street missing something? And more importantly, is there still a bull case here for retail investors? As of May 7, 2025, BigBear.ai is trading at $2.99, down more than 65% from its 2023 highs. And this isn't just random noise. Over 19 million shares traded in a single day last week, showing us that institutions and retail alike are actively repositioning. The recent drop came after a combination of financial restatements, broader tech sector weakness, and concerns over revenue growth. But here's the interesting part. Despite the sell-off, BBAI isn't showing the kind of volume you'd expect from a complete capitulation. That means some investors are still holding strong or quietly accumulating. Let's zoom into the numbers. BigBear reported $34.8 million in revenue for the first quarter of 2025, a 5% increase year over year. That's not explosive, but it shows they're growing in a market that's tightening. Now here's the hard part. A net loss of $62 million. That's steep. And it's enough to scare away short-term traders. But the company did something smart. They used this earnings window to reduce their long-term debt by $58 million, and they now have $107 million in cash on hand. So yes, the losses are large, but they're actively shoring up the balance sheet, and that tells me they're thinking long-term. This isn't a zombie company clinging to life. It's a business investing in future positioning, especially in defense, predictive analytics, and edge AI deployment. Now let's talk about the elephant in the room. BigBear.ai restated its financials going back to 2021. That raised immediate red flags. The reason? They identified material weaknesses in internal controls over financial reporting. That's never a headline you want to see, and the market punished them for it, fast. But here's where it gets nuanced. These issues weren't fraud or fabrication. They were control-related, not revenue-faking. That matters. They hired new compliance officers, overhauled their audit systems, and are working with regulators to clean up reporting. In fact, investor lawsuits are already being filed, which paradoxically might be a signal that the worst is already priced in. The fear was real, but if you dig past the headline, you'll see this is a company correcting course, not covering up criminal behavior. So how are analysts viewing BBAI now? Surprisingly, the consensus rating is still a buy, with multiple price targets floating between $4 and $6. That's over 30% to 100% upside from where we are right now. First, the AI sector is still expanding, especially in defense, logistics, and predictive modeling, which is where BigBear operates. Second, their partnership network is no joke. They've worked with the US Army, Air Force, and other government entities. If even one new federal contract lands in the second quarter or third quarter, it could trigger a rapid revaluation. Now, if you're not ready to go all in on BigBear.ai shares, or you want a way to make money while waiting, you might want to look at options. BigBear's current price around $3, combined with its high volatility, creates a perfect environment for selling options. It's not just about betting on price direction, it's about getting paid to be patient. If you're bullish but wouldn't mind buying at a lower price, selling a cash-secured put lets you collect premium while agreeing to buy the stock if it drops further. If BigBear.ai stays above your strike, you keep the cash. If it dips, you still get shares, just at a discount. And if you already own shares, covered calls give you a way to generate consistent income while waiting for the next move. You're agreeing to sell if the stock rises, but in the meantime, you're collecting income, week after week. What makes this strategy even more attractive is that BBAI's implied volatility remains elevated, and that inflates the premiums. In other words, the market's nervous, and you can get paid for taking the other side of that fear. Options aren't for everyone. But in a setup like this, where uncertainty meets opportunity, smart options selling can turn a volatile stock into a reliable income engine. This is where things get interesting. On one hand, BBAI has real clients, real revenue, and a footprint in the most valuable emerging technology space on the planet, artificial intelligence. On the other hand, it has reporting baggage, short-term losses, and uncertainty in execution. So, what's my view? If you're a trader looking for a clean chart, this isn't it. But if you're a long-term investor who believes in the AI infrastructure space, and you can stomach volatility, this $3 level could be a very compelling entry point, especially if you scale in and monitor future earnings and government contracts closely. Because, let's be honest, if BigBear.ai rebounds to $6 or even $8 on renewed optimism, no one's going to remember it dipped to $2.99. But if they miss the recovery, they'll wish they had loaded up when fear peaked. So what do you think? Is BigBear.ai a buy at these levels, or are the risks too big to ignore? Drop your take in the comments below. I read everyone. And if you found this breakdown helpful, hit that like button and subscribe to The Alternative Investor. We cover high conviction ideas, emerging sectors, and the plays Wall Street isn't talking about.